What up, bros and sisters? What up? What's up? Today I want to talk about scaling in. You know, you take a position. There's two possibility. There's two scenario here. When you take a position, either you're in profit or in loss. For example, you enter the position, you take the position at this point, and you take a short position here. Let's say, and let's say you put your stop above this level, maybe, or we usually put stop above the current flag or above the signal bar, but yeah, if you do so, you will stop out after a while. But if we imagine that you put your stop above this shit, you're legit, you're okay. Okay, here you enter the position, you're in profit for a while, but after that there is this pullback and it goes above the entry price. Here you are in loss, you are in a stop zone. Your stop hasn't touched yet, but you're in loss. So what do you do? There's something, some traders they have this approach. When you're sure about the analysis and you know, okay, there's a pullback, but after that we have this leg down, they reduce their risk, they reduce their they increase their the probability of taking profit by scaling in, by adding to their position. We call it adding to your losing position, because you have this losing position, you are in loss, and you add to your size, you increase the size of your trade. That's what you do. And when you do that, the average you actually higher and take up your entry point. You actually how should I put this shit? You approaching the entry point to the stop loss, and by doing so you actually increase the chance of your taking profit. If you do so, if you approach the stop loss, the entry point to a stop loss, when price comes back, when it hit the entry point, your initial entry point, you're not actually break even, you're in profit and you can take profit. And some traders, they exit at this point. I know it's kind of complicated. I try to put it in a right way. I give you a lot of examples. Don't worry about it. So we are talking about losing trades, losing positions. You know, basically we have pullbacks, 50% pullback. It means after we have a leg, price is likely to have a 50% correction. If you use this Fibonacci tool here, yes, we have this 78%. It's more than 50%, but yeah, that's a pullback. And if you say, okay, you enter the position at this candle, at this bar, and you want to take profit at this level, and that's your stop loss. You are in losing position, but your stop hasn't touched, is untouched. You see, price is at this level, it's a losing, it's a stop loss zone. but you're still in the position. Some traders, they add to their position, they enter at this point, but at this price they add to their position. For example, if they take 100 pips, I'm sorry, if they took 100 units, they add another 100. I'm sorry, it's 1000. And they have 2000 units in total. So that's what adding to your position means. And by doing so, your entry point changes. You know, your entry point well, it's not at this level anymore. You actually close this entry point to your stop loss, and when you're doing so, you create a distance between this new entry point and this initial entry point. And when price goes up, for example this candle happens, you're actually and hit your entry point, your initial entry point, your old entry point, you're actually in profit. Okay, but if you didn't add to your position size by hitting this entry point, you are break-even, not in profit, because your entry point hasn't changed at all. But when you add to your position, your entry level goes down. But when you don't change it, that's at the same price. That's where it was in first place. So that's it. That's all about this. That's all this is all about. Let's I'm gonna give you another example. Buy position. It's a buy position, a short position. Another example. Let's say you enter the position at this bar. Sorry. Let's say you consider this level as your target, whatever, or even this target. If you look at it, it didn't touch your target because for any reason, maybe you chose the wrong target, whatever. But you enter the position at this level, at this price, it goes down, you're in profit, but there's a strong reversal here, and at this point you are in loss. If you add to your position here, you actually your entry point goes up and get more close to the stop loss, and yeah, let's say your stop loss, your new entry would be at this level, and when this candle hit this, you hit your initial entry, you actually can exit the position with profit, with a slight profit. It's not that considerable because the distance between this initial entry and this new entry is not that much, but yeah, you can get out of the position not only without any loss but also with profit, which is great. But scaling and adding to your position size, it's not just about losing trades. You know, sometimes you enter a position, you take a position and it goes up. For example, you enter the position at this point, you leave your stop below this level. Yes, you enter this position, you put your target at this level, let's say, because there's a resistance out there, and yeah, price goes up, and at this pullback you are still in profit. You can add to your position size, and when you do so, actually your entry point goes up, and when it happens, you reduce your risk and increase the probability of taking profit. For example, when you add to your position, your entry price goes up, and it places somewhere around here, and even if a breakout happens and price goes down and reverses, you can get out the position with profit, because this is your new entry now, and if price reverses and break this trend line down, you can still get out the position with profit. Let me show you with a different color. If a breakout happens here, you can get out the position with profit. Okay guys, I made a mistake. I'm sorry, I apologize for that. Actually, when you let me erase all of this shit. I don't want to cut this out because I want to show you that everybody can make mistakes, and yeah, even me. When you enter the position at this point and consider this as your entry point, this is your stop loss, and this one as your target. When you add to your position at this pullbacks, you actually lower your entry point from here, this price, to this price. So even okay, I fucked all of this up. How should I fix it? Okay, let me say it again. I just want to prove it to you that that's okay. If you make mistake, you can always fix it. You enter the position here. That's your stop loss at this area, at this below this shit, and that's your take profit. This is not a good example at all, I think. Maybe. This one is better. Okay, you enter you take a buy position, you put your stop below this level. Yeah, it's a better example. And that's your take profit. You enter the position here, you are at profit, but your stop hasn't touched yet. And here we have this big badass pullback. It's almost near your stop loss, but it hasn't touched it yet, and we are in position. But what you do is you actually add to your position size, and by doing so you make your entry point lower, and if price goes up and touch the initial entry point, you can get out the position with profit. How fun is that? But sometimes you're not in a losing position. Your position is actually winning, a winning one. You enter the position at this price and you add to your position at this pullbacks. That's it. By doing so, you're not actually reducing any risk, but you're in a winning position, so it's worth it. You're actually increasing the risk because you make your entry point, and you it goes up, and it hires, goes high, or goes up. Your entry point goes at this level, and if a breakout happens, you go into loss, and actually your risk increases because your entry point goes up, and if you don't change your stop loss, you have this risk to reward ratio now. You see, you add to your position at higher prices. When you buy something at higher prices, you actually reduce the total profit, because you didn't buy it at once at this lowest price, and you actually add to your position at as price goes up. And why you do that? Because you don't want to risk all of your money at once, and you just, as you make sure about the price, about the trend, you add to your position. Yes, it costs you more, but at least you make sure that you're investing and you put money into a legit trend, not in a losing trend. So that's why. So if you, let me put it this way and sum it up, if you add to your losing position, you reduce the risk, and it's good, and it increases the probability. But if you add to a winning position, you increase the risk and reduce the probability, because if a breakout happens, you go into loss and you have a bad risk to reward ratio, but it's worth it because you're in a winning position. I wanna write it down. Scaling in. Check this out. When you scale in, there's two scenarios, whether it's a winning position or losing position. Either it's a losing position or winning position. If you scale in and add to your losing position, you will reduce the risk. But if you add to a winning position, you increase the risk. But it's worth it, because if you increase the risk, because it's a winning position, for God's sakes, and it's a high probability if that hit your target. But this one, you can just exit the position at the initial entry point. Okay, I think that's enough. I hope you enjoyed this video. Goodbye.